Good afternoon, everybody. This is Kathy Elkins with Premier Marketing. Thank you for taking your time out of your busy schedule today to join us. We really appreciate that. On the phone with me today, I have two presenters that you haven't listened to yet in our little conversations that we've been having weekly with Sean Ruggiero and Brad Lewis. Brad is off today, and Sean, I think he's missing in action, but I think he had something come up on his schedule that he couldn't get out. So on the phone with us on the webinar today, we have with us is Bobby Nerum, and Bobby is the VP of Life Sales for Brokers International. And then I have Brad Weber with us on the phone. His title is Business Development Consultant on life insurance. He's also with Brokers International. So Brokers International is an integrity company, part of what Premier Marketing is. We work hand in hand together, building different concepts, helping each other out when the need arises. So Bobby and Brad, thank you for joining us today. I'm gonna let you take it away.
You bet. Thank you very much, Kathy. Appreciate that. I want to say hello to everybody. Happy Tuesday. Hopefully everybody enjoyed the nice long break and the weekend and got some good weather, time with friends and family in this beautiful country that we have. I appreciate the opportunity to present to everybody today. We're going to go ahead and try to tie a few pieces together here. We know that we've had a series here as far as representing and introducing us to the Life and Annuity Resource Center. So what we're going to do now is go ahead and maybe work through a few case examples and see if we can't tie the whole system together. So we'll try to work through this and get through this in a decent amount of time. So again, did want to introduce ourselves. Brad Weber, he is our business development consultant here at Brokers International, extremely knowledgeable on the life side. My name is Bobby Nerum. I am vice president of the life sales team here, and appreciate everybody's time today. So, all right, so we're going to jump into this. What life insurance do you write, and will it actually add value? So like I said, what we want to try to do today is try to tie everything together here and work through everything that we've had in the previous webinars throughout this series to try to maybe give you a little bit of a real world situation and an example of what you guys are going to run into out there in the field. So if we go ahead and move forward with that, we will if you look in the title there, it does say, and will it actually add value? We want to add that part in there because kind of a misconception, or maybe just a an impression of the life insurance industry is that all life insurance should have 6 or 7 digits worth of death benefit and about 2 digits worth of cost. We just wanted to say that not all life insurance has coverage of millions and has premiums of under $100. Life insurance products and solutions come in very different scopes and different sizes. And just because it may not be what the common perception is, doesn't necessarily mean that we're not still helping our clients and putting them in a good product. So what we're going to do is run through that and show a few solutions that are going to help with your clients. So again, just a quick disclosure there. We are not tax, legal, or accounting advice. Please do also show this slide if you use this for any presentations with your clients. So we want to go ahead and set kind of a basis here. So what we're looking at here is the confidential needs analysis, better known as a fact finder. This is located on your LARC site. This is what you're going to use to kind of guide that conversation that you have with your clients to try to capture the information that you need in order to provide them solutions that'll help. We're going to kind of dive into this a little bit and talk through some pieces of it. The first is going through the date of birth and if they have a spouse and their children and ages. Now, these may seem a little self-explanatory, but we do want to capture the ages and if they have a spouse. Reason being is that age goes into plays a very prominent role in life insurance. So we do want to know that as well as know the age of the spouse. We also want to make sure that we are talking about their children, their descendants. Um, a lot of people, their children or their grandchildren is the most important thing in their worlds, and it's extremely motivating to know about their children because that's something that's very important to them. So when we fill out the confidential needs analysis, we're going to want to make sure that we do touch on those pieces. I'm sure many of you out there have children or grandchildren, and you all understand how important they are to you and how they really represent a large motivating factor. When you're working through this needs analysis and you're having a conversation with your clients, it may even be beneficial to ask them, to maybe talk a little bit about their children or grandchildren. Maybe have them tell a story or just kind of build that rapport and get to know them a little bit more because it will be prominent in pretty much everything that you do with your clients. Now, another part that we want to pay special attention to is the extended care section on the fact finder. Less than 5% of the population actually has a true long-term care plan. So it's important to ask this, and when they say no, we do not have any plan, reassure them that, hey, that's not out of the normal. A lot of people are dealing with that. But then ask them, what are their concerns? Most people that do have long-term care plan, they state that the four main concerns were remaining independent, having choices when that time comes, protecting their assets, and staying at home. So what works really kind of well is talking to them about the situations maybe that they've been aware of or that they've heard of. Extended care or long-term care is vital to the population that we're dealing with currently. If you think about it, who are our clients in the Medicare for Medicare policies? It's not a 20 or 30-year-old, right? These are 65 plus year old individuals, and they have more than likely been exposed to a need or a story or some sort of experience that they're aware of, and it really is appropriate to have a conversation around that piece and to ask them about maybe their experiences or some of the stories that they've went through in order to really cement the need for extended care or long-term care. So just a little talking piece on that. We're going to want to make sure that we are having a conversation around long-term care or extended care. What is their plan, and talking through that. Another piece is going to be, the golden question. Do you have anything that acts like life insurance, right? Are you self-insured? That's a question that can kind of break down barriers. If you're having a conversation with your client and you're, doing a good job of qualifying them and and uh, and, and going through a lot of the information on your fact finder, and you just kind of ask them, out of nowhere, hey, do you have a 401k, or hey, do you have an IRA? That's kind of an abrupt turn. So this question, the golden question, really gives you a segue into that conversation. Do you have anything that acts like life insurance? So that's one that you're going to want to make sure you're asked, as we have spoken about that question as well in the previous series. So you're going to want to make sure that you ask that one and have a conversation around that piece. Lastly is going to be a question about income. You're going to want to make sure that you have a conversation around the income piece. The way you can position this with your client is, by having a conversation around the income piece, it really lends itself to qualifying them for any opportunities that they may have, right? Medicare and supplements and many of the things that are offered are dependent upon income. And we are held under the best interest requirement to make sure that we're doing the best we can for our client and make sure that we're discovering everything that they qualify for. Now, there are certain products that maybe have a level of health or underwriting, financial underwriting qualifying. So that's why it's important to really dig in and get the full picture of your client, because there's a lot of options under your health and life solutions, and you're just going to want to make sure that you have a complete understanding of your client and their entire scenario. So that was just a quick recap of kind of where we're at in the process. So we've maybe had that first interview and collected the information on the client using our confidential needs analysis. The next step would be to send that to Ask a Specialist, and then we will come back with different opportunities and solutions to help protect your clients. So what we want to do now is kind of move into a few examples and just run through some potential client situations and talk about a couple of life insurance products. So the first client we're going to talk about is Bridget. Bridget is a single mother. She has 2 kids. And how did we find that out? Well, we asked her and found out about that during our during our fact finder, and had a conversation around that piece. She does not have any long-term care, no life insurance. She's not self-insured, nothing that acts like life insurance. And when we had the conversation with Bridget about long-term care, about extended care, she really went into a deep story. She talked about the struggles and the experience that she had while she was caring for her parents during that time. And it was something that stuck with her and made a dramatic impression. And the fact that she did not want her kids to have to experience that same thing. And so we know that that agents with Premier are amongst the best in the country at really forming genuine relationships with their clients. And I'm sure everybody on this call right now has had a situation where they've had some sort of emotionally charged conversation with a client to something of this nature. And again, that's where the confidential needs analysis form, that fact finder, really helps discover that situation. So we'll go ahead and go forward here and talk about the solution. So what we have is Mutual of Omaha, which is an A+ rated carrier, has a product called the IUL Express. The IUL Express is a simplified issue product, so there's no fluids, no blood, no urine, no attending physician statements. It's simplified issue, so super easy for her to apply and qualify for. So for $248 a month, she's looking at a $100,000 death benefit. This product also comes with an increasing cash value and critical and terminal illness living benefit riders. Now, why do we bring that up? Because one of the big concerns that Bridget had was around long-term care, and if she were to need that in the later stages of life. And so the critical and terminal illness riders with the Mutual of Omaha product allow the client to access the funds prior to their death in need of, or in situations where they become of need of that. So for the critical illness, they just have to meet 2 of the 6 average daily living, whether it be eating or bathing or etc. Once they reach those, then they qualify for access to the funds to help, and the funds are distributed. They basically are accelerating the death benefit, so they can use it for in-home care. They can use it to pay for services. They can use it for, paying for their children if it's their time, whatever it may be. It doesn't matter. They're able to cover that. One of the great things about it as well is if she needs the long-term care, then she can access the living benefits. But whatever she doesn't spend, she passes on to her kids tax-free. Also, as we said with this product, it does build cash value. So she's going to have access to a certain amount of cash value that's tax-free in case of emergencies, or maybe her car goes out, whatever it may be, she's going to have access to those funds as well. So that is our first example. The next example we have here is Tom. Tom is 65 and unhealthy. Now, I'm not necessarily going into a conversation with Tom around his unhealthiness and thinking about what he qualifies at the time that I'm at the table having a conversation with him. I'm really just writing down what it is that he's saying. And we're not going to necessarily get too deep into health. Your job as the agent is to collect that information and submit that to Ask a Specialist. Ask a Specialist, Premier and Brokers International partnered together to give you people that can support you with that, and we can take care of it from there. So, but after that needs analysis and that discussion, we find out that Tom's wife is 65 and she is healthy. He does not have life insurance or long-term care. He's not self-insured, and with the income conversation that we had with them, we have the 2,000 monthly benefit, and hers is the 450. So one of the things with Social Security is that yes, if he passes away, she loses the 450. She is able to keep the higher of the two amounts, so she would keep the 2,000, but she is going to lose the 450. Why that is important is, if Tom is to pass away, whatever their expenses may be, they're using both her Social Security and his Social Security to make ends meet. And if he's to pass away and she loses the 450, that can be very impactful. The price of a gallon of milk, or for a gallon of gas, or how much the rent is, that doesn't get reduced by 450. It doesn't drop in half just because Tom passed away. So she is going to feel somewhat of an impact with losing that 450. So the solution we have for her, Corebridge Financial, has a product called Simply Now, and it is a level whole life policy. Now, us on the inside are familiar with maybe a final expense policy, and that's pretty much what this is. I do caution to use the term final expense with your clients. It's a level whole life policy. That's what it is, and it is what you can call it. So I suggest that you use that jargon versus a final expense policy. Corebridge Financial offers a $10,000 level death benefit. $61.81 per month is what that's looking at, and this would be guaranteed till death. So when Tom dies, he can offset nearly 2 years of lost income for his wife. Now, this may not be a life policy that you see on TV or hear on the radio where, they got $2, $3, $4 million. But life insurance isn't necessarily an all or nothing. In this situation, something's going to be better than nothing. The $450 that she's going to be missing is going to replace roughly almost 2 years worth of income for her. And somebody who is on maybe a fixed income, 2 years of time can mean all the difference. It might buy her time to maybe sell the home at a fair price, as opposed to having to put the home up for sale right away and drop the price. It may help her to buy a little bit of time to make arrangements, to move in with a kid, move in with a friend, whatever it may be. It just gives her time to make those decisions and actually execute them. So don't think for a second that just because a solution doesn't involve 6 or 7 digits, that it's not a solution that's going to be valuable or appreciated to your clients. All right. So the next example we have here is Tom is, a version of Tom as well. And this version of Tom actually happens to be uninsurable. So same scenario, wife is healthy, no long-term care, no self-insured, no life insurance, Social Security income. The solution that we have for this is, again, Corebridge Financial, and this is a guaranteed issue whole life policy. So this policy is guaranteed to be issued. As you see, the price is $90.83 a month. So it is a little bit more expensive, but I'm sure you would expect that, being that it's a guaranteed issue policy. This policy gets you the same $10,000 death benefit. Now, with this guaranteed policy, there is an elimination period. So it's guaranteed after 2 years that the policy is in force. So you may say to yourself, well, there you go. That's the problem, right? That's how they get you, type of thing. Thinking that, oh, if they pay in for 23 months, 22, 23 months, and he dies, then they don't get anything. With this product, if they were to pass away inside of the 2-year period, Corebridge will actually pay back 110% of all premiums paid. So not only are they going to get all the premiums that they paid back, but Corebridge is also going to pay them an additional 10% on top of that. So with this product, there's no health underwriting. It's a guaranteed product. They have a 2-year elimination period. And worst case scenario, they put their money in a risk-free investment with a 10% return. So, that's tough to find an investment like that is completely risk-free with a 10% return. So you're still putting them in an infinitely better place than where they were. Now, and there we go, same thing. If he does pass away after the 2-year period, we're replacing almost 2 years of income for his spouse, to help buy her some time to make some decisions and some changes. Now, our last example that we have here is the Daniels. If you look at the specs on this screen, perhaps you run into some clients of this nature as well. Retirement income, doing well. They're self-insured, 4.6 million between the IRAs. They own 4 properties and have 2 children. So they're in good shape financially. But one thing to be spoken about in this situation is there's going to come a time when they're going to pass away, and they are going to look to pass these assets to their children. And if anybody is aware, that one of the biggest threats or issues that we deal with there is estate tax. So depending on what state you live in, to pass these assets to their children, those assets are going to be taxed, not only at the state level, but at the federal level. If you pay attention in any financial circles currently, or tax circles, you know that there is a date coming here in the near future, in a couple years, where the tax exemption for estate taxes is going to be dropping. It's actually going to be cut in half. So a lot of your clients that you're talking to now at age 65, 66, 67, by the time they actually pass away, whether it be 15, 20, 30 years down the road, we really don't know where the taxes are going to be. We really don't know what percentage the estate taxes are going to be at the state and federal level. What we do know, though, is that someone like the Daniels, their estate and their net worth is going to grow. So over the next 15, 20, 30 years, their assets are actually going to grow. And so we do know that that with net worth increasing, and with the exemption for state and federal estate taxes decreasing, that makes for a difficult situation in the future. If they pass on the IRAs and the properties, paying the taxes on the properties, which property do you sell, right? A lot of times people are kind of attached to the properties. maybe one of the properties was a condo in South Carolina where they vacationed with the family. Maybe one of the properties is where they grew up, their original primary residence. A lot of times people are somewhat attached to these properties. And if you need to pay taxes on that because these assets are being handed down, a lot of times the beneficiaries don't necessarily want to think about which property they're going to sell. So the solution we have for this is going to be Prudential has a survivorship product. It's called the Pru Life Survivorship Index UL. And this is a second to die policy. So the policy will not pay out until both of the lives have passed away. This specific product is guaranteed to age 121, and it is $18,000 a year on the premium for $1 million death benefit. Now, $18,000 a year may seem like a lot, but if we put it in comparison to the $375,000 in income that they had per month, or excuse me, per year, that percentage isn't necessarily as high as one may think. Again, this policy is guaranteed to age 121. So upon death of the surviving spouse, it will pay out. So if the surviving spouse, let's say the wife may live to age 95, and I say the wife just because in general women live longer than men. But if she were to live for another 30 years, um, even $18,000 per year is $540,000 for still $1 million. So a great solution here would be that they are able to essentially gift the premium to the children. They can pay the premium with that policy. So the gift would be tax-free to the children. When the parents pass away, the death benefit passes to the children, and that's also tax-free. And then they're able to actually use this $1 million to pay those estate taxes. So the kids would be able to keep all the properties, keep the IRAs, and spend them down and pay taxes accordingly. But they're able to actually pay the tax with the life insurance. Another thing too is that the children and the family, nobody's really attached to life insurance. They are attached to properties. So in this solution, it was really advantageous because the family had no problem parting ways with life insurance, whereas the properties actually meant something to them. So you may think that whether it's a single mom or an uninsurable husband or a couple that are looking in really good shape financially for retirement, no matter what the situation is, there is a solution for everybody. Everyone's going to have a need that we work through. And what we suggest, again, just to kind of recap this all and show how it all plays in, is the Ask a Specialist solution, right? So what we need to do is use the confidential needs analysis, have that great conversation. And I know that we're gearing up right now for ADP. So having those conversations now would be extremely advantageous. And after enrollment period is over, we can always take those notes and go back to our clients and have these additional conversations. And have conversations around the products and solutions that we think can protect them. So again, use your needs analysis, have a great conversation with your clients, submit everything to Ask a Specialist, and then our experts can help with solutions and options that you may have. We can help support you with different products, with videos that discuss the product and the benefits of the product. So that's really where we come in. That's our job, and your job is, again, just to have those good conversations, ask the golden question every time, and submit those scenarios to the LARC, and and then we'll give you the tools you need to sell the policies. Again, the goal, right? Imagine if you got 100 Medicare clients. If the goal is one annuity per quarter, you're talking about 4 annuities per year, 4 out of that 100, we should really like our odds as far as that goes. You would think that of the 100 people, roughly 4% could see the benefits of, a fixed indexed annuity or something that could give them upside potential with no downside risk. So goal again, 1 annuity per quarter, and then 1 insurance policy per month. So Kathy, thank you for bearing with me there on that. Those are our prepared remarks. I'll kind of turn it back over to you.
Okay, thank you. If anybody has any questions, we do have a question on the screen. Go ahead and type them in and we'll go ahead and answer them. But good information. I'm glad you were able to share with the audience details about a few different clients and which direction to go. That is one of the biggest questions I get asked here. How do we know? What do we do?
Right.
But besides that needs analysis form, Premier does have a life pre-screen form. So if you need that, please let us know too. It does go into depth of their health a little bit easier. And we do help with the risk assessments here with clients. So please let us know if you're interested in getting that. Just go ahead and email one of us on the team or let us know here in the questions. We can get back to you on that. I do have one question. Oh, go ahead. I'm sorry.
Oh no, I was just going to reiterate the same thing you're saying there, Kathy. Premier has done a great job of putting their agents in a position where they have the resources. They have the weapons to really help their clients succeed. All the tools and resources are there. It's really a matter of having conversations using both the health side and the life side of the license, right? Really having those conversations to see where they can help protect their clients in the long run. So kudos to everybody at Premier and the work that you guys do to support all of your agents.
Thank you. Appreciate that. I will say too, one thing, if you do have your health license and you have a life and you're not talking life insurance to your clients, somebody else is. So make sure you're letting your clients know that you do and you can handle a life. Even if you're pretty new to it, I mean, that's what we're here to do, is to help you, walk you through your scenarios and help you get the right options for your clients. So,
and you're spot on with that, Kathy. Brad and I travel quite a bit and have these conversations with agents everywhere, and it really is moving to that holistic agent, right? That agent that can provide the health, the life and the wealth, and be able to service their clients on everything that they need to have conversations with the beneficiaries and their descendants, and to be able to offer that entire family the protection that they need. So it is something where the industry is moving that way. So yeah, we definitely want to be out in front of the curve in that perspective, be able to offer both the wealth products, the health products, the life products, in order to protect our entire book of business.
Correct. Okay, I do have a couple questions so far, and the first one is, if the husband dies at age 85, and this is using the second to die, the wife continues to pay the $18,000 or it's reduced. Nope, the client still pays the $18,000 per year because they're still getting, it's a second to die. It pays at the second death, not the first. So after the spouse passes away, that's when the death benefit's going to pay. So it is not a reduced benefit at that time frame.
Yeah, and at that, just to add to that, Kathy, is that's 100% correct. But one of the benefits of a survivorship or a second to die policy is that the cost of insurance is actually cheaper within those policies than if the couple were to go out and get their separate policies. So, you would think a way to position that would be to explain to your clients that we're going to go ahead and try to help reduce your premium as much as possible by starting with this policy up front. It's a second to die policy. Since there are 2 lives on the policy, that really kind of decreases the risk of a sooner death for the insurance company, and in turn, the premiums are actually cheaper in that situation.
That they are. Yep.
Yeah, and the other thing, Kathy, to point out on that one too, that just specific design is that it was using a product that was guaranteed to age 120. If you have clients that are interested in a survivorship product that is solely based on the index performance and that's what keeps the policy active, you could potentially look at some options that would bring that premium down, but on the flip side also, that policy is going to be dependent upon something other than the guarantee keeping it in force. It would be dependent upon positive cash value keeping it in force. So, we can certainly explore different options for the clients depending upon their risk tolerance. Also, that specific design was with a guaranteed death benefit was the focus.
Yep. That's a huge benefit for clients because a lot of people don't expect someone's going to live past 100 or 105 or older.
Sure.
Considering my grandma was 103 and a half when she passed away, so I automatically, it's like, this can happen. And if you do your research, they're talking more millennials over the age of 100 doubling, quadrupling in the next few years.
Sure.
So
yeah, and the other thing too that I've seen, Kathy, when I'm running illustrations, you probably see it as well, is you could guarantee that policy at age 100. It would reduce the premium a little bit, but in my opinion, at least, the majority of the time, it's not enough, I don't think, and certainly that's the client's decision. But a lot of times, to me, it's not enough of a difference that you wouldn't just add on the additional 120, 121, guaranteeing it to full maturity.
right. Yeah, it doesn't make not much difference. I mean, not enough to do that because you never know. You want to make sure you're protecting your clients in the end. So, yep.
You got it.
So the second question we have, this is something I'm not in whole life, or I'm not in the final expense arena. So I want you to please answer this question. Regarding the Corebridge G guaranteed issue whole life, during the first 2 years, 110% of the premiums are paid back. Is that paid as death benefit generally tax-free when paid to the natural person, or is a return of premium plus 10%, which suggests that the 10% gain is reputable as ordinary income? That's premium coming back, isn't it? Plus 10%?
It's premium return plus the 10%.
Okay. And that's tax-free on the 10%, correct?
I can certainly verify with AIG Corebridge and get you a definitive response.
Okay.
Yeah. It's very similar. I mean, a lot of your graded death benefits and guaranteed issue products are set up that way, to where there is that 2-year period or sometimes a 3-year period where it is the return of premium. I will verify, get something in writing from AIG Corebridge that confirms that it is tax-free as well, similar to the death benefit.
Okay, I appreciate that.
Yep. So we'll circle back on that.
So for those of you who've been on our webinars before, going over these series that Sean's been helping us with, at our website, www.premiersmi.com, you will be able to go into the agent portal if you're an agent of Premier's and set up with carriers. You will actually be able to go into, it's not changed yet, but it's called Annuity Resource Center. Give us time to fix that. They are putting detailed information about the last 3 webinars that we have had in there to go back and redo those videos and watch them. And if you'd like to be able to do that, you should be able, you sure can be able to go inside there and watch those. In a couple days, you'll see this webinar again added into that area. So if you need help getting in there or any questions about this webinar after we're done here, please reach out to the team. It's 800-365-8208. The Life Team extension is 607. And if you need help with final expense, we'll make sure that we can help you get to the final expense marketer that you work with. Thank you, everybody, for joining us. I really do appreciate you taking your time out of your busy day. Thank you, Brad, for and thank you, Bobby, for jumping on with us and helping us through this webinar and giving some really good detailed information for us. So everybody have a great day. Take care and talk to you guys soon. Bye, guys.
Thank you.
Thanks.